Ladies and gentlemen, good day and welcome to KEI Industries Q1 FY25 earnings conference call hosted by Monarch Networth Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need an assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Dani from Monarch Networth Capital. Thank you, and over to you, sir.
Yeah. Hi. Thank you, Manav. Good afternoon, everyone. On behalf of Monarch Networth Capital, we're delighted to host the senior management of KEI Industries. We have with us Mr. Anil Gupta, Chairman and Managing Director of the company, and Mr. Rajiv Gupta, CFO of the company. We will start the call with opening remarks from the management and then move to Q&A. Thank you, and over to you, sir.
Sure. So, good morning, everyone. Welcome to this conference call. I am Anil Gupta, Chairman and Managing Director, KEI Industries Limited. Along with me, Mr. Rajiv Gupta is there, who is the CFO of the company. I'll give a brief about this quarter results. The net sales in Q1 of FY24-25 is rupees 2,060.50 crore against rupees 1,780.53 crore last year. So the growth in the net sales is 15.72%. EBITDA in this quarter is rupees 232.41 crore against rupees 186.6 crore last year. Growth is 24.55%. EBITDA/net sales margin is 11.28% against 10.48% in the same period previous year. Profit after tax in this quarter is rupees 150.25 crore against same quarter in the previous year rupees 121.39 crore. Growth in the profit after tax is 23.77%. Profit after tax/net sales margin is 7.29% versus 6.82% previous year same period. Domestic institutional cable sale, wires and cables, is rupees 574 crore in the first quarter against rupees 493 crore in the same period in the previous year. Growth is approximately 17%. Domestic institutional cable sale for extra high voltage cable is 79 crore in the first quarter against rupees 49 crore in the previous year same period. The growth is approximately 62%. Export sale in this quarter is rupees 233 crore against rupees 307 crore previous year same period. There is a decline of 24%, which will be made up substantially because some of the substantial amount of goods could not be dispatched due to logistic reasons. Total cable institutional sale contribution is 39% against 44% in the previous year same period. Sales through distribution network, that is B2C, is rupees 1,085 crore against previous year rupees 842 crore. So the growth is approximately 29%. Distribution sale contributed 53% in the first quarter as against 47% previous year same period. Sales of EPC department other than cable is rupees 131 crore as against rupees 111 crore. Growth in the EPC sale is 19%. Out of the total sale of EPC, EHV EPC sale is 45 crore as against rupees 29 crore in the same quarter last year. Stainless steel wire division sale is 53 crore against rupees 58 crore in the same period last year. Volume increase in the cable division on the basis of production and for consumption of metals in Q1 of FY24-25 as compared to previous year same period is approximately 18%. Total active working dealers of the company as on 30th June 2024 was approximately 2,015. We are in the process of strengthening dealer network by replacing some existing small dealers with the bigger distributors. Pending order as on date is 3,590 crore. In the mix is EPC 653 crore, extra high voltage cable 333 crore, domestic cable from the institutional cable department 2,052 crore, and export orders of cables pending is 552 crore. So the total is 3,590 crore. External ratings. India Ratings and Research has affirmed its long-term rating as AA with positive outlook. ICRA and CARE long-term rating is AA stable. Short-term rating from India Ratings, ICRA and CARE is A1+. Book value per equity share of the company is 365.77 as on 30th June 2024 as against rupees 348.87 as on 31st March 2024. The total borrowings of the company is rupees 165 crore, out of which channel finance 98 crore, cash and bank balances is rupees 599 crore as on 30th June, against total borrowing of rupees 134 crore last year.
In March
not last year. Against total borrowing of rupees 134 crore as on 31st March 2024. Acceptance creditors as on 30th June is 504 crore against 506 crore as on 31st March 2024. So the net debt is rupees 70 crore as on 30th June as against net cash of rupees 60 crore on 31st March 2024. During Q1 of this year, finance cost was rupees 14.16 crore against rupees 16.51 crore in the same period last year.
In the March quarter.
In the March quarter. Interest income from bank deposits or others in Q1 is rupees 8.64 crore, which is included in the other income. It was rupees 6 crore in the previous year, same period. Now I will tell you about the future outlook. Capacity utilized during Q1 FY 24-25 approximately 87 to 88% in cable division, 80% in house wire division, and 90% in stainless steel wire division. During Q1 24-25, company has incurred a capital expenditure payment of rupees 145 crore, in which the Sanand Green new project coming up and near Ahmedabad is rupees 76 crore, Chinchpada in Silvassa rupees 24 crore, Bhiwadi rupees 21 crore, Pathredi rupees 14 crore, and other plants locations rupees 10 crore. Company has done capital expenditure for brownfield capex at Chinchpada to further add capacity for wires and house wires and LT power cables. This will be completed in it is partially commissioned and but fully completed in Q2 of FY 24-25. Another greenfield brownfield expansion is going on at Pathredi in Bhiwadi area with approximate cost of rupees 125 crore, which will increase the capacity of LT power cables by rupees 800 to 900 crore per annum. It will be operational in Q2 of this financial year, 24-25. That means by August or September. This brownfield capex will enable us to grow by 16 to 17% in this financial year. Apart from the brownfield capex, in FY 24-25, company has planned rupees 900 to 1,000 crore capex on greenfield extension for LT, HT and EHV cables in Gujarat, in Sanand. Commercial production of which will commence by end of fourth quarter of FY 24-25. We have already started construction in FY 23-24. Further, we will spend another rupees 500 to 600 crore in the next financial years to complete the project to maintain a CAGR of 15 to 16% per annum in future years, as against achieved CAGR of 14 to 15% during last 15 years. So this is a brief commentary from the management side. You are requested to raise any query you may have. It will be our privilege to answer the same. Now, I will also give a little brief about the industry outlook. The industry outlook remains strong and with a good demand in domestic market as well as international markets. We are progressing well on our aim to increase our footprints in the various destinations internationally and getting good traction from US market and European markets. And in the moment our new factories start commercial production, we'll be able to see export volumes going up besides the domestic volumes. There's a good amount of capex coming up in India or abroad in solar power projects, wind power projects, transmission and distribution projects, and also in various industrial projects. So this is a brief commentary from our side. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have our first question from the line of Praveen Sahai from Prabhudas Lilladher Capital. Please go ahead.
Yeah, thank you for taking my question and many congratulations for a good set of numbers for Q1. So the first question, sir, is related to the export. What exactly happened in the export for a decline for a quarter?
We had around 65 crore worth of cables lying for export, but the logistic was in the container placement was in customer's scope, and they delayed the placement of containers, due to which a substantial amount of cables, around 65 crore, could not be dispatched, which is now being dispatched in July. So we'll be able to make up the shortfall in the Q2. We have explained that there is a substantial order book in the export itself,
More than
550 crore at the moment.
So container delay or availability has sorted as per you. Now we will see in the Q2 those
yes.
numbers.
The container placement was not in our scope; it was in the customer's scope, and they delayed the placement.
Okay, got it. Second thing is related to the dealer-distributor based revenue, which has increased 29%. So, and also reached to a 50 to 53% contribution of overall. So, is that including the export number, and also it include the cable business of ours?
Yeah, it's a dealer-distributor business, a wire and cable both.
It does, and we are not exporting any cables through dealers. So it is all, the dealer business is all domestic. The export business we are doing directly.
Okay, got it, sir. And the third clarification is related to the housing wire and winding wire. From the last several quarters, observing that's a very good growth in this segment you are reporting. So if you can give some color of is it from the housing wire you are getting a growth, or the winding wire which has brings the growth in that segment?
It's basically the wires and flexibles used in the real estate and panel market, etc.
So it's largely real estate based. What the growth you are reporting?
Yes, sir. It's mainly real estate based.
Okay. And lastly, sir, can you give some volume growth number for wire and cable? How you had a grown for a quarter?
We have, in volume terms, we have done a growth of 18%.
On the basis of the production.
On the basis of consumption of metal in the sales.
Okay. Okay. And lastly, sir, on the EHV, the last quarter call you had given that the EHV FY25 would be a flat on the YOY side, but this quarter also you had given a very good growth. So is that the guidance for last quarter of a flat EHV for this?
No. It is flat. Because the first quarter number last year was very low because of the non-clearances from the customers due to ROW issues. That is why we are seeing a growth if compared to last year. But otherwise, on a quarterly capacity basis, it is flat.
Okay. So your guidance related to flat EHV stands.
Yes.
Holds. Yeah. Okay.
Previnji, one thing is we have given the guidance of 16-17% growth for overall for all the products with all the segments for the full financial year. It is in the normal course. Sometimes EHV sales goes up, sometimes goes down also. Sometimes export goes up, goes down also. Sometimes retail goes up, goes down. So it does not matter to us. Our matter to us is how we are utilizing our capacity, and ultimately we are achieving the growth of 16-17%.
Right, sir. Right.
It is not on individual segment or individual product.
Right, sir. Got it. Thank you. Thank you, sir, and all the best.
Thank you, sir. A reminder to all participants, you may press star and 1 on your touchtone telephone to ask questions. We have our next question from the line of Natasha Jain from Nirmal Bang Equities. Please go ahead.
Thank you for the opportunity, sir. My question is a follow-up on the previous question. So you said that there was container unavailability in the export market. Can you also just throw some light as to how the US market performs for you, and is there an inherent slowdown in that market?
Madam, first of all, this was not a problem of containers availability from our side. I said that containers placement was in the scope of the customer, the overseas customer, and they delayed the placement of the containers due to the reason known to them. So we can't comment on it, but all that material is being dispatched in the month of July. Your second question was?
So in terms of the export market, especially the US market, how does the outlook look like there in the short term?
Yeah. The customers we are dealing with in the US, the outlook is very good, and we are going to substantially grow business in US in this financial year. Means maybe because the last year base was very low, so we expect that ballpark figure of 200 to 300 crore coming up from US market this year.
Understood, sir. So can you just give us some sense in terms of your geographical split in your export market?
Exact I cannot give, but we have substantial exports in Australia and Middle East, some countries in Africa, and US. US and Europe has started only last year. But Australia is our very big market for last 10 years.
Understood, sir. And one last question. Can you just call out what kind of cables are we exporting in these markets?
We are exporting medium voltage HT cables like up to 33 kV to 66 kV, and also cables for oil and gas industry in Middle East and US.
Understood. And lastly, sir, EHV that we manufacture is completely used in India?
Some EHV cables we are exporting to Australia also, but mostly we are selling in India.
Got it, sir. Thank you so much, and all the very best.
But we are working on developing exports of EHV cables, which may start from next year.
Sure, sir. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Venkatesh from Axis Capital. Please go ahead.
Yeah, thank you for the opportunity. Just one very simple question. I mean, one of your most important competitors in India, and who also exports a lot of cables outside India, has been telling the broader market that they have been actually rejigging their distribution network. Just like you, they used to also sell all their cables directly to customers. Now they are trying to sell it via distributors. Now, but you do continue to sell through directly to the customers, and you are not trying to set up a distribution network. So can you kind of tell us what are the pros and cons of each of them, and why you are not attempting to do it, and why what you are trying to do is better for KEI? Some kind of a perspective.
Our export model has always been direct business. We are not developing any distributor in overseas markets, and because we feel that access to the end user and the end customer or end contractor gives us better margin and better, sustainability and regularity in the business as compared to distribution.
Now, while you are at current levels, let's say 2 to 3 years down the line, when your size is significantly bigger on the export side, will the fact that you are only going directly impact your reach, up to how many customers you can reach? Any particular thought on that?
I think we will definitely review that strategy maybe in the next 6 months to 1 year. At the moment, we are not working on that strategy of developing distributors, but we may review it.
Okay. And one last question from my side. When we actually see the exports of cables and wires from India to the US, we are actually seeing that one is calendar year 23, because the data is available on a calendar year rather than on a financial year. There is a deceleration in terms of exports from India to US in terms of exports of wire. What was 30 to 35% for the past 2 years. In calendar year 23, the growth is only 6% for the full year, exports of wires from India to, and especially in US, we are seeing last 2 to 3 quarters, exports have started declining. Now, what I'm trying to drive at is this something related to there is some issue with the end market, or it is just that among the people supplying, one of your key competitors is a large exporter and they themselves are having a problem? That is why these numbers are showing to be weak. Or is there a problem with the end market?
I don't think there is a problem with the end market. It may be the problem with the individual company exporting from India. Secondly, our export to US was very small last year because we just started last year. So, and we are only selling cables. We are not selling conductors or any other materials. So we will be we'll be comparing our export compared to very small numbers of last year. But our export into US should be substantial this year, as per the order availability with us.
But we are not exporting. We are not exporting wire to any country.
Exporting wires. We are only exporting cables. That too for power cables and for oil and gas industry.
Okay, understood. Thanks a lot. All the very best.
Thank you, sir. We have our next question from the line of Amit Mahawar from UBS. Please go ahead.
Yeah, hello Anilji and Ajit, congratulations on a very stable growth and profitability. Sir, you have multiple expansions. By 2027, most of the capacity that you're planning would be normalized and available for full year, right? First full year. So roughly around by that time, if you do 13,500 crore turnover, your exports would be mostly around 2,000 crore by then. Is that the right assessment?
Yes. Maybe more than that.
Okay. And broadly on the branded house wire turnover, what is that you have in mind in, say, by 27, sir?
Amitji, house wire business in our company is growing close to 20% plus year after year, because our base is also low, but still we are focusing to grow at 20 to 22%. Because in all the respects, we are adopting a disciplined approach so that overall growth of the company should be 16-17% plus. Accordingly, we are creating the capacity either for wire or for cable, and continuously we are increasing the capacity in our existing factories for the wire also. That's how we are growing in a disciplined manner.
Great, sir. Thank you very much for this question, sir. One last question on, so in the next 2-3 years, the kind of growth we have, your cash flow will still be, maybe much better than what you had in the last 3-4 years. So Anilji, beyond the current capacity, then I'm more talking about the next progression in business beyond just cables. How should we think about for the next 4 to 5 years on this company in terms of more B2C businesses, if you have in mind, around adjacent segments? That's it. Thank you.
At the moment, we have no plan to add any new products in the B2C business. If something comes up in our mind, we will definitely let you know in advance. At the moment, there is no plan.
Okay. Thank you, sir, and good luck.
Thank you, Amitji.
Thank you, sir. We have our next question from the line of Manoj Gori from Equirus Capital. Please go ahead.
Yeah. Thanks for the opportunity, and sir, congratulations on a good set of numbers. So my question here, if we go back in FY24 and when we see that we grew by roughly around 17% on top line front, so can you bifurcate probably what was growth from government-related orders or probably private orders, and probably how you are expecting this to shape up in the coming years? Any qualitative answer over there? That would help.
Sir, private orders are mainly coming from solar power developers and industrial projects in domain of cement, steel, and other miscellaneous industrial projects like pharma or any type of industry which is coming up. So far as government orders are concerned, even a lot of transmission and distribution project orders are now coming from private discoms. A lot of distribution companies in various parts in India are privatized, and like CESC, like Torrent Power, and like that. So a lot of orders are from such companies also. At the moment, we don't have any quantification of and dealers when they buy. We have to collate that whether they are selling to a private sector or they may be selling to a contractor whose end customer may be government. But we don't have available data at the moment.
But most of the government contracts taken by the EPC contractors, so we supply to EPC contractors.
Correct, sir. Got it. So secondly, if you the sectors that you just mentioned, anything you see in the coming years, probably you are getting incrementally positive demand drivers from these sectors, or probably in some of the sectors you are seeing some headwinds. Any read over there?
See, individual sector में कोई demand ज़्यादा देख रहे हैं.
I think if we talk of any individual sector at the moment, I think solar has, as an individual sector, has substantial demand in this year. But otherwise, all sectors are doing well. And we hope that from next year, a good demand should come from the newly started expansions in thermal power projects and even pump storage projects for generating power.
Correct, sir. So lastly, on the margin side, obviously you have been very kind in highlighting the top line guidance. Can you throw some light, like where we see ourselves at the end of FY 25 on the margin trajectory?
Close to 11%. We have earlier also guided the same thing.
Correct.
The growth is 16-17%.
Yeah. And sir, what would be the price hike at the end of June month versus, let's say, February of FY 24?
Price hike?
Yes.
All depend on the copper movement.
I see, if we say as compared to February and June, average price hike might be 7.5 to 8%. But we keep on adjusting our prices depending on the input cost and the metal prices like copper and aluminum.
Correct, sir. Thank you, sir, and wish you all the best.
Thank you, Manoj.
Thank you. We have our next question from the line of Ananya Purushottam from Cogito Advisors. Please go ahead.
This is Andre Kulkarni. Anilji and Rajivji, congratulations once again for giving such consistent and great numbers. I just heard you say about 11% margin guidance for FY27. You know, if you look at the various years, you've delivered between 10 and 11% consistently. Is there a possibility and the promise of upping that margin aspiration from 11% to 12% or somewhere between 11 to 12%? Is it possible? Is it aspirational?
We earlier also commented on this topic. As our capacity gets in place, then because of economy of scale, we will achieving higher margin. So that is possible. In next 3 to 4 years, we will be adding into the margin at least by 1% plus. Mainly because of economy of scale.
In a 3-4 years time period, you're saying?
Pardon?
In what time frame are you saying, sir? Rajivji?
Maybe 26, 27.
26.
Because by 26 our capacity will be in place of extra high voltage.
Right. Okay.
Yes.
And one more clarification I had. You have shown that the amount of channel financing that you are doing has reduced. That actually means that the amount of channel financing availed by...
Channel financing is reduced mainly because of the first because basically the FLDG amount increased by the bank. Earlier it was used to be 50%. Now all the banks have reduced to the level of 15 to 25% FLDG. So the recourse has basically reduced.
Sorry, what is the FLDG?
It's basically a first loss default guarantee we need to give to the bank. It's basically recourse. So the recourse percentage has decreased.
So our risk for channel financing has reduced by 50%.
So therefore, this amount of channel financing availed by the dealers has increased. Am I right?
Yes, that is increased.
It has increased.
That is increasing because our sale is also increasing.
Right. And also the proportion of dealers who are availing for channel financing, what आज की तारीख में कितने हैं?
Close to 550 plus dealers are under channel financing, and close to 70% of our total dealer distributor sales are covered under the channel financing scheme.
Okay. And can that move further or
yes, it is improving further because as the dealer is getting old by 7 to 8 months, we are covering under channel financing because we are making the new dealer distributor also.
Okay. And just one comment.
And apart from the channel finance or the recourse reduction, we have taken the receivable insurance for all the receivables. Whether it's a export receivable or it's a domestic receivable or it's a retail distributor receivable.
Okay. And just one comment I wanted to make that Anilji just now clarified that you have no intention of getting into B2C enterprises at this point of time. That actually is very reassuring to us because it means that you are sticking to your core strengths and businesses, and that is reassuring to investors to us.
Yes, sir, Purushottamji. We are focusing in our strength and we are focusing in our product domain where we are having the specialized.
Okay. Thank you very much, sir.
Thank you, Purushottamji.
Thank you, sir. We have our next question from the line of Keyur Pandya from ICICI Prudential Life. Please go ahead.
Thank you. Sir, first, a couple of questions. So first, on the capacity side, just to get clarified, so Silvassa 100 crore of CapEx and Bhiwadi 110 crore of CapEx for LT cable. These two are the CapEx which would be available for FY25. And am I missing any other CapEx which got commissioned or is about to commission in near term?
In FY25, little bit CapEx will go into the Silvassa plant, because that plant, since last 2 years, we are adding the capacity, because we are adding the capacity of cable, we are adding the capacity now into the wire also. So now each and every inch of land is completing by second quarter, so nothing will be available for us to further expand in those places. Only now expansion will go on for the new greenfield projects of the Sanand, which is Ahmedabad. So as Anil said, that in the current year, 900 to 1,000 crore, and next year, 500 to 600 crore will go into the same place for all the greenfield expansion completion.
No, sir. What I was asking is, I mean, we were supposed to start Silvassa expansion around 100 crore in March 24, and Bhiwadi expansion for LT power cable for exports from June 24, which you mentioned that which will start in July, August. So these two are the additional capacities available to grow in FY25, or is there anything else also, or rest of the capacities are fully utilized?
It will be available for capacity addition, and that's how we are growing in the current financial year, 16 to 17% kind of things.
Okay. One follow-up is on the EHV side. Now EHV is fully utilized and the next EHV expansion would come in Gujarat Greenfield. So till that time, saying including FY26, the EHV would remain more or less flattish. Is that a correct understanding?
Yes, sir. So these product-wise sometimes goes up, sometimes goes down also, but the capacity utilized not only for EHV, capacity utilized for the basically medium voltage power cable also, the same capacity.
Okay, understood. And this last question, on you mentioned about some rejig in the dealer distribution network, replacing smaller one with larger dealer distributors. Now, do you see any impact in near term on the dealer-based sales in our revenue?
He was saying that it's a continuous process to add more strengthened dealers and to increase the geography also, to reach increase. So that's a continuing process actually. It is not a one-time job, it's a continuing process.
Okay. Noted. I have a couple of questions. We'll get back in the queue. Thank you and all the best.
Thank you, sir. We have our next question from the line of Achal Lohade from Nuvama Institutional Equities. Please go ahead.
Yeah, good afternoon, sir. Thank you for the opportunity. I just wanted to check, in terms of our categories in cables and wires, is it possible to get what kind of market share, and is there any white space? Is there any particular SKU which we can still look at adding over medium term?
We have already covered everything.
I think we have already covered market share. I mean,
close to 12%.
Close to 12% in the cables. And what do you mean by white space? Means you mean to say that where the capacities are, demand is more and capacities are less? That is, what do you mean by white space?
No, as in, like you mentioned about the oil and gas industry, right? The exports for the oil and gas industry sector, something on those lines, whether it is railways, whether it is, solar, wind, etc.
Yeah, we are mostly exporting cables for solar projects, wind projects, oil and gas projects, and transmission and distribution projects. These are the main, and in some areas we are even exporting to some industrial projects as well.
Got it. And just to clarify, you said the metal consumption growth is 18% YOY for the quarter. Have I understood right, sir?
Yes.
Actually, this 18% for the production. So if we have produced more actually, like Anilji explained, some of the export material which will be selling to in this financial year, in this second quarter, it is like this only.
Understood. Apart from export, is there any increase in the inventory days?
No, inventory, because almost our 50% sales to the institution and close to 50% to the retail. So in the 50% institutional sale, it is a normal feature. Sometimes material get delayed because of the inspection or something else. But overall, ultimately, the growth rate will be 16 to 17% for full year basis.
Absolutely. Understood, sir. And just to clarify, you said 11% margin for the current year, right? FY25?
Yes.
And further margin expansion of 100 basis points in FY26-27. Have I understood right with operating leverage?
Yes.
Got it. Understood, sir. Thank you and wish you all the best.
Thank you. We have our next question from the line of Ashia Khosla from BOB Capital Markets. Please go ahead.
Yeah, hi. Thank you for taking my question. Sir, can I just get the order book bifurcation?
Order book of close to EPC. In the EPC side, the order book is 653 crore rupees. Extra high voltage power cable, 333 crore rupees. Institutional order for the cable and domestic market, this is 2052 crore rupees. And export market order is 552 crore rupees. Total is 3,590 crore rupees.
Okay. Thank you for that, sir. Also, I just wanted to understand the A&P spend for quarter one and what will be the trajectory going forward.
It is close to in the range of 10 crore rupees, and the same kind of expenditure will be on a quarterly basis.
Sure, sir. Thank you.
Thank you. We have our next question from the line of Praveen Sahai from Prabhudas Lilladher Capital. Please go ahead.
Thank you for a follow-up question. It's related to the increase in the debt and reduction in the cash as well. So these are because of expansion. So around 100 crore cash has been reduced if I look in March.
Yes. For the capex, it will go on increase because we are taking the term loan of close to 300 to 400 crore for the new project, wherein we will be investing around 1,700 to 1,800 crore, the total cost of the project, close to, as per the need, maybe 300 to 500 crore. We will avail the term loan and balance we will be from the internal accruals. As of now, working capital utilization is not there because we are having the cash, but for the term loan, we start availing.
Okay, great. And second questions are related to the branded housing wire. As you had mentioned that the growth has been very good and the way forward also around the 15% of growth you are expecting. So can you give some geographical presence where you are largely present and how much of the market share you are holding in this segment?
For our sales, close to 36% plus from the northern region and close to 27 to 30% from the western region. And 17 to 19% we are in the southern region and balance is from the eastern region. That is for our geographical breakup of the dealer distributor sales.
Okay. And one clarification on the solar, as you had mentioned that the demand is huge. How much is the contribution right now in your wire and cable right now?
Because we are selling to EPC contractors, so in our books, the customer is EPC contractor actually. So that's the same EPC contractor is buying for the other projects also, not only for solar but the other projects also.
Okay. Got it, sir. Thank you. All the best.
Thank you, Praveen.
Thank you. We have a follow-up question from the line of Keyur Pandya from ICICI Prudential Life Insurance. Please go ahead.
Thanks for the opportunity again. Sir, just one question. So we have seen strong, say, house wire, winding wire sales. If you can give some idea on how the end industry or industry is growing, and probably they are growing faster than that. So just color on how industry is growing, the end demand, And the primary sales also, I mean, we have seen with other players that they have seen some impact of destocking on their primary sales. So at the industry level, has the destocking because of the copper prices stopped, decelerated? So some color on the industry in the house wire.
First of all, these are the normal things because every time copper will increase, copper will decrease. Depending on the behavior of copper increase, the distributor also wait and sometimes they buy extra. So these are the normal factors related to this industry actually.
15 minutes.
Industry directly belongs to the consumer side for the individual houses and bungalows, and for all the larger cities, industry belongs to the real estate projects, which are the multi-story buildings are coming up. So these things are continuing going up, but the nature of the industry will remain as it is actually because of the copper.
But what has been the growth in the end user demand, that is secondary or tertiary sales? Are we seeing any pickup based on real estate deliveries in larger cities? So any color on the end industry demand at the secondary level?
I think end industry demand is growing. It's only that sometimes due to fluctuations in the copper prices, dealers delays the lifting of material for maybe 15 days, 20 days, but beyond that they cannot delay. Ultimately, the end user is requiring the material. So I think that any offtake due to the copper may be temporary.
It's a part of the nature of the industry, no?
Yes.
It's going on every time.
So basically, just wanted to understand that the industry, the consumer demand is growing in single digit or high double digit, or any idea on growth rate of? I mean, we have seen that cables are growing faster than house wire.
It is basically higher double digit because lots of individual bungalows are being made in all over the country, and the real estate projects which was earlier not there in the larger cities since last 1.5 to 2 years. These projects getting announced and they had started the projects. So this demand is coming up now.
Noted. Sir, thanks a lot and all the best.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. As there are no further questions, I would now like to hand the conference back to the management for closing comments.
So, thank you very much for interacting with us on this conference call. And we assure you that company is on the right path and will be growing as per the guidance. And if you still have any further questions, you may reach out to us. Thank you very much.
Thank you, everyone. Thank you very much.
Thank you very much. On behalf of Monarch Networth Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your line.